Hello class and welcome to week 5 of BACC 531 Managerial Accounting. This week we're going to be taking a look at chapters 8 and 9 of your course textbook, examining content regarding the master budgeting process in chapter 8 and flexible budgets, standard costs, and variance analysis in chapter 9. As you delve into content from chapter 8 this week, you'll learn to focus on the nature of how organizations define their financial goals in the way of preparing numerous budgets that collectively form an integrated business plan known as the master budget. Budgeting for many companies, many organizations, and indeed many professionals is a sort of proverbial four-letter word. It's one of those things that managers often think of as an unpleasant experience, as something to be dreaded or something to be disdained. But in the course of exploring Chapter 8 and the master budgeting process, I hope you will come to see and understand this not as something to be dreaded, not as something to be weaponized, but rather as a tool that can be leveraged to improve not only your management, your leadership responsibilities, but in particular that can be used to improve an organization as a whole. Budgeting is indeed having to lay out the needs of an organization and the projected costs of those needs, as well as the expected revenues that will be used to provide for those needs and hopefully some profit after those costs have been paid. But beyond simply a listing of items and dollars to go with it, the budget forces communication, it forces planning, and it can provide important and helpful strategic opportunities for all organizations, whether they're merchandisers, manufacturers, service-based entities, whether they're for-profit, not-for-profit, whether we're talking business organizations in the classic sense or we're talking governments and government sectors. Budgeting provides a wide array of benefits when it's done well and when it's implemented well for virtually every organization. The master budget is simply the big picture outlay of the budget in static form, whereas as we switch our attention in Chapter 9, we focus on the nature of what a flexible budget is, taking the master budget and then learning to flex it according to different levels of activity, different levels of production in an organization. So you'll learn about how to prepare a flexible budget, as well as how to compare flex budgets to actual results for the purpose of computing revenue and spending variances. You'll take a look at a number of different variances, not just what variance analysis is, but how variance analysis can be used and leveraged to help improve performance, to help set loose strategic capabilities, and also help catch and improve and countermeasure problems for the organization in a variety of ways. Chapter 9, as you explore this content, will also expose you to how standards, that is, standard costs, can be used to compute materials, labor, and overhead variances in a variety of different settings and applications. So in the way of learning objectives, in Chapter 8, you'll learn to understand why organizations budget and the processes they use to create those budgets. You'll also prepare a sales budget, including a schedule of expected cash collections, a production budget, a direct materials budget, including a schedule of expected cash disbursements for purchases of materials, a direct labor budget, a manufacturing overhead budget, a selling and administrative expense budget, a cash budget, a budgeted income statement, and finally a budgeted balance sheet. As you then move forward into Chapter 9, your learning objectives will include preparation of a flexible budget with one cost driver, as well as how to calculate and interpret revenue and spending variances using that flexible budget and comparing budget to actual in order to facilitate analysis. You'll also learn to prepare a planning budget and a flexible budget with multiple cost drivers. You'll compute the direct materials price and quantity variances and learn how to interpret and explain their significance, and you'll compute the direct labor rate and efficiency variances and understand their significance as well. You'll also learn to examine, calculate, compute, and analyze the variable manufacturing overhead rate and efficiency variances, and you'll learn to compute and interpret the fixed overhead budget and volume variances in Chapter 9 as well. Finally, Chapter 9 will conclude with an examination of how to prepare an income statement using a standard cost system. In addition to the narrated PowerPoint slides and the concept overview videos that have been provided for you this week, Week 5 will also include graded assignments, including your Week 5 reading assignment, your Week 5 lecture video quiz, your Week 5 exercises and Connect, and also your Week 5 data analytics project. As always, if you have any questions over this content, over an examination of the concepts that we're exploring this week, or over the assignments themselves, please reach out and I'll be glad to help. You can reach me by email at jake.brock@ucumberlands.edu. I'll be glad to help and look forward to hearing from you. With that, thanks for watching and have a fantastic week ahead.